Good morning, guys. It's Brandon. So, some interesting things that are taking place in the market. Right now, we see some form of a global meltdown, substantial selling pressure across the world. The Nikkei down quite a bit, 2%. Russia has just been getting crumbled, and the U.S. has been following. An interesting correlation between the U.S. indices and the oil, as oil has been recently crashing, has given a lot of question marks for analysts. There's a lot of uncertainty out there. I've always believed that low-cost oil is actually a bullish indication for an economy's overall productivity and GDP. So we're going to have to see how it plays out. Today is the FOMC meeting. It starts today and it will be completed tomorrow. So we will see if there's any changes in U.S. monetary policy. And just remember, guys, that the U.S. is typically the leading economic indicator, and the global markets, they tend to follow. So we're seeing a lot of carnage across the board. I wouldn't be surprised if we see a initiation of QE4. Otherwise, we're likely going to see rate hikes. So yeah, just onto the charts. Your McClellan oscillator is giving substantial oversold readings. You can see that an oversold market can continue to become more oversold, especially when there's a lot of uncertainty and fear. The fear gauge is creeping higher and higher. The sentiment in the market is becoming more and more bearish. That's exactly when I start to look for going the other direction. So I see here, based on this Fibonacci spiral, that we could probably extend this oversold condition maybe to the -90 area before we get a bounce to the next quadrant. Some levels to consider in terms of the indices. I'll start on the monthly and the SPY. We have a primary uptrend. We could say that we're potentially seeing a moving average cross down. It's testing it. It's very questionable at this point. Some sell signals, but still in an overall accumulation phase. You could say that 195.50 would be a good downside level if we were to get there. Zoom in a little closer, the weekly, we're testing volatility band and the 20-period moving average. So I would assume that we could get some relief, a little bit of a relief rally here, but some of the indications are giving some form of a more of a bearish inclination. So I guess you could call this a divergence, because we are testing significant levels. Price action is the leading indicator on the chart, but the technical indications are very helpful as well. I will add again that we are still in an accumulation phase of a primary uptrend, and as over the past couple weeks we've been seeing distribution, does not mean that this is a bear market. It just means that this is a recycle that is, in my opinion, nearly complete. So on the daily, we see that we have significant support at let's see, this is a 100-period moving average, 125-period moving average. I see that we have a gap over here at 196. I would anticipate that I wouldn't say go long blindly, but I'd say hold on to your cash. Probably limited downside in this week. The FOMC meeting is going to be significant in terms of, like I said, monetary policy and the just major changes. I wouldn't be surprised to see initiation of QE4. So we'll see how it goes. Expect a whippy market, a lot of choppiness, and just remember, when we get into oversold conditions like this, it sets up excellent buying opportunities. So don't go long blindly, like I said. Just hang tight. Wait for the Fed to complete their minutes. It'll be done tomorrow. We should have some clarity, and we'll take it from there. So good luck, everybody. I hope you make some money or play safe. Take care.